All right, thank you so much for staying with us. We're back. Well, oil prices fell sharply on Tuesday after U.S. President Donald Trump said that the war in Iran would come to an end very soon. Crude had reached almost $120 a barrel on Monday over fears that the conflict would cause lengthy disruptions to energy supplies from the Middle East, but dropped back to around $90 following President Trump's comment. Although oil prices are still significantly higher than they were before the war, European stocks markets rebounded with the London FTSE 100 index rising 1.9%. Gas prices also receded. President Trump said he thought the war is very complete, pretty much, although he later warned Iran to not block the Strait of Hormuz, a shipping route critical to global energy supplies. Well, Dr. Chinan Dikwal is my guest. He is a vice chair at the African Energy Council. Dr. Dikwal, I must thank you so much, and it's always good to see you as always. Well, let's get into our conversation now. Let me ask you, what really is your reaction first to this a bit of bounce back, if I'm allowed to use that word, that we see coming back to about $90, $92 from what we saw yesterday? Tell us what is happening and what this means for the larger market.
Thank you so much, Tolu. So I think there are a few things to try to unpack there around the oil market. So you've just spoken about the last statement, last very public statement by President Donald Trump, where I think around that time, just over $100 per barrel, about $106 per barrel, the price has crashed all the way. I think just before I came onto this call, to about $93 per barrel. So just to, in fact, 93 up to 89 actually dollars per barrel. Just to caveat that. But I'll say this. At the start of the war on the 28th of February, many people were just pricing in geopolitical risk. We saw crude oil go from $69 per barrel all the way to about 80, I think 3 days into the war, $80 per barrel, and it stayed there. So people, many analysts were putting a $10 a price, above usual, just based on geopolitical risk. It then moved from about 80 all the way to about 92. And the reason for that was when the attacks really started to intensify and we started to see a real blockage around the Strait of Hormuz. When much of the traffic there started stopping, again, there was a premium that traders put onto the price. So it went to about 92. And you know this so well. When people started to see real attacks on energy assets, refineries, pipelines, and all of that, then it went sky high over, about $119 per barrel. Okay, so that's how kind of where we were initially. Once it went to that point, President Donald Trump came out and he made, well, actually, before he came out, we started hearing musings of countries potentially using their strategic petroleum reserves to overflow the market so price will come down. Now, from 119, we saw it drop slightly down. And then, of course, President Donald Trump has come out to say that the war will not last so long. So I think that's given a bit of a respite. But I'll be very honest, this has been probably the most dynamic. And Have been in the oil markets for a long time. It's probably the most dynamic and changing oil markets that we have ever seen, for a long, long, long time. And hopefully this can be wound down shortly. I still think there's a way to go for this conflict.
I hope so. And many analysts are on that page saying that they hope that this is not long lived, because if that happens, let me ask you what that might mean. If they don't open up the Strait of Hormuz and we continue with this challenge, what do you think could happen to the price of crude? As of yesterday, someone says it could even hit as much as $150 for a barrel. Do you think countries have the capacity to cap the prices at this time?
There are a few things there. I think the first thing to bear in mind is if the price, if the disruption at the Strait of Hormuz continues, okay, and I'll be quite frank, it's not impossible for that to happen. The reason for that is a lot of the Gulf nations that are producing crude oil at the moment, many of them have finite storage. Okay, so right now, many are producing crude oil, but it's just going into storage, waiting for the markets to open for it to go to market. The problem is that storage is finite the point where that market, that storage, stops entirely, then what could happen, unfortunately, is that many assets will have to shut down. And when they shut down, it's at that point that you'd see traders pricing in real disruption. And the scenario you mentioned there, potentially really high oil prices, $150 per barrel, could become a possibility. But you are 100% right, Tolu. What we saw yesterday was we saw the president of South Korea coming in, and he put a cap on the price of energy, price of crude oil, as it were. But I think even that was a bit too quick. He responded to that in a very quick way, because since he made that pronouncement, we've seen the price of crude oil come down to about $89 per barrel right now. So I think the key thing there is a waiting game, so we can pull the trigger at the right time and not make knee-jerk reactions, too quick decisions.
Let's talk about managing petroleum price volatility as this is happening, particularly in a country like Nigeria. Many would say that it's a time for Dangote Refinery to come to our rescue with a capacity of 650,000 and still rising, still increasing. So what do you make at this time? We were buying at almost 1,200, 1,100 in some cases. What do you think would happen as we move on with managing this pricing?
So, Tolu, a couple of things. We were 774 naira per litre at the gantry. It went up, I think, all the way to 995 naira at the gantry. And since then, there's been several increases to that price. I think the last count that I saw was 1,700 and I think 1,775, something of that sort at the gantry. So the reality of it is the price is changing very dynamically for exactly the reasons we've been describing here. The conflict is raging. The price of crude oil is increasing very rapidly. And because the price of crude oil is increasing, many of us would remember that 2 years ago, okay, if anything was happening like this, it didn't affect Nigerians because we had subsidy. So regardless of what the crude oil price was, we were insulated from that problem. Unfortunately, because subsidy is gone right now, any market movements, everybody would feel the pinch in his pocket. So that's exactly what's happening, because we do not have a cushion. So we're just talking about South Korea just now, who are putting a price cap on the price of PMS. That is some sort of a subsidy. We don't have that right now. So every movement on the international markets, we would feel that immediately. In fact, just to put this out, we at the African Energy Council have been crunching the numbers, I was saying. So in the past, so when if you go 2 weeks ago, when crude oil was approximately $69 per barrel, if we looked at the cost stack, so the total cost stack for crude oil. So if you look at the cost stack, 50% of that was simply the feedstock cost. Feedstock meaning the price of crude oil, okay? The price of crude oil. On top of the price of crude oil, you put the cost of refining, you put the margin of refining, you put taxes, you put port charges, levies, all of that. All of that cost builds up to give you what price we pay at the gantry. So for the sake of argument, let's say 774, okay? But the striking thing here is 2 weeks ago, feedstock cost was about 50%. Today, because the price of crude oil has gone up, feedstock cost is greater than 60% of the total cost stack. So you can see how that's changing very quickly and very rapidly. And in situations like this, several governments are responding in different ways. First of all, we saw the G7 countries saying, okay, maybe they would release petroleum reserves, additional strategic petroleum reserves onto the market, up to 400 million barrels. They've since pulled back. We've seen South Korea giving some sort of a subsidy. We've seen Vietnam also thinking about removing taxes and levies that are on food imports. There are several things that need to be done. And I think many Nigerians will be looking at the Nigerian government and saying, is there going to be any respite? Because if crude oil goes to 120, 130, $150 per barrel, the pain across the economy will be very substantial. The inflation across the economy could be really substantial. And if we sustain that for a long time, many economies in the world could easily go into recession.
Oh, so you agree to the fact that with necessary interventions that should be looked at this time. Is that what you're saying?
Well, without a doubt, I think reasonably, okay? The Nigerian, this is not a decision that should be taken lightly. You have to do that in the context of the central bank. You have to do that in the context of the finance minister. So we need to look at our economic recovery. We need to look at inflation, the inflation numbers, inflation rate right now. and several before you make that decision. But it's certainly something that should be on the table, because what you do not want is that the recovery that Nigeria has seen, the reforms, the gains we've seen from reforms get reversed because of the oil price.
Indeed, I'm worried about that too. I've talked about that for some time, that will this not affect or reverse some of the gains that we've seen, projections from IMF, World Bank, and all of that, stability in our foreign exchange market. We've talked about this for years, and now we see a bit of, parity looking at that market. That's the other market, the black market, or the foreign exchange market, and the they're getting it from the Apex Bank and from commercial banks. But moving forward, the entire oil market is like what is playing out. What do you think will still be the prospect for crude oil as we move on in 2026?
I think if you look at a lot of the forecasts that we had at the start of the year, many people saw that Q1 and Q2 will be relatively flat because of demand. So normally, Q1 and Q2 are quite flat months in the year, principally because we'll come out of a big holiday, Christmas holiday, people traveling. And then Q3, Q4 is when it really picks up, and then it peaks in Q4 and then repeats the cycle. A lot of people had that forecast. Okay. In fact, when you look at it, many people were forecasting the price. I think the crude oil on average for the year to be approximately $65 per barrel. I think this is changing the scenario very considerably. And to answer your question, much of that will depend on how sustained this crisis is. So far, I think this current conflict has thrown every prediction out of the window. But can I say this quickly, Tolu? The first thing to recognize about this conflict is Iran, who is in the center of this conflict. They realize they cannot beat the US militarily. Iran cannot. They cannot face the firepower of Israel and the US. Okay, but what they recognize that they can do is they can win politically. Okay, and what I mean by that, when I say win politically, they have several things in their lever. If you think about the conflict, the moment the strikes happened, it was just in Iran. Iran understands the political game so well, and they expanded the perimeter of the conflict. They started striking the Gulf neighbors, which is very unfortunate. But that expanded the conflict. It brought a lot of people in. They choked the Strait of Hormuz. Even if you are in any remote part of the world today, you'd feel the pinch of buying crude oil, or buying stuff in the markets, because inflation is going to start to go up. So they've used politics, geopolitics, to really put pressure on the US and Israel to try to come to the negotiation table. Now, whether that would happen or not is a thing that we would have to see. Bear in mind also that the US is soon going to go into elections for the midterms. Elections are in November, but you know that by July, the economy has to be nice and straight and in very positive places for the Republicans to have any shot. So there are several dynamics and things here that play that I think we need to look out for. Hopefully, this conflict can be resolved in a very short space of time. But it's a very complex situation. And for people like me who are sat in the Middle East, it's very difficult, I'm going to say.
I must say, at the moment, you're in Riyadh. How is it like over there? We heard of some strikes even around Dubai airport over the weekend. And even up till, we're still hearing of all of this. Tell us the true situation, what you see around.
It has been quite a difficult, I'd say, 8 to 9 days so far. Attacks everywhere, your phone ringing because we get alerts about the situation. And, if you have family particularly, it's a really difficult time, very, very difficult time. Many families have had to leave the area, but we're hoping that this can be resolved in a very short space of time. But so far, there's been, very little challenges, I'd say. Things have been kind of mellow. We're hoping that in a short space of time.
Dr. Chinandikwale, it's always a pleasure talking to you. I must thank you for joining the program. Vice Chair, African Energy Council there, live for us at Riyadh in Saudi Arabia. Do stay safe.
Thank you. Thank you very much.
All right, then. You heard Dr. Dikwal said it's really kind of time. I must say, family members and everyone, you need to hear from everyone whenever there is an attack and all of that. But let's see how all of this plays out. Let's review trading activities at the Nigerian Exchange Limited to see what is happening today. My guest is an equities portfolio manager, head of trading at Fundrone Partners Limited, Mr. Oladapo Enyidero. Mr. Enyidero, good afternoon, and thank you so much for joining our show.